Are you saying pow? What are you saying?
One of my favorite things to do is point out Jerome Powell and some of the Powell-isms, if you may. He was on 60 Minutes Sunday of this week. And if you got a chance to watch that 12-minute infomercial, if you may, about the Federal Reserve and some of the economy aspects that he spoke about, it was interesting. But more importantly, our job on this show is to essentially educate viewers and listeners on facts and not opinions. Now, we do share our opinions, but we also try to back it up with the facts that kind of derive those opinions. Jerome Powell has become one of the most, how can I say it, that you could use the word notorious, but probably one of the most well-known Federal Reserve chairman in the history of the Fed. And that's because with the media coverage we have today, as well as social media coverage, there's nothing like that before. So, in the past, when a Fed president would go take the podium after a Federal Open Market Committee, no one cared. Like, it didn't mean anything. Now you've got a YouTube channel that streams it live and millions of people watch it. So, I mean, just kind of offers some perspective of one of the reasons why he's probably one of the most popular ones. And whenever we do one of these episodes, it gets more views than other, it gets a lot of views. Not the most, but it gets a lot. So just kind of staying with that aspect, let's go into it. So Scott Pelley conducted this interview on 60 Minutes. Obviously, I don't watch a lot of 60 Minutes, but whenever I get a chance to watch someone I'm going to talk about, I do. And this whole topic of conversation is about the Fed, what do they see coming, why they're doing what they're doing, and a lot of historical evaluations from Jerome Powell on here. And for the most part, I thought that there were some key things that came out of this interview that just kind of led to this podcast. And the first one was, hey, listen, are you avoiding a recession? Are we going to have a recession? And then why not cut the rates? And, just a kind of a flashback. 2 weeks ago when the Federal Reserve met, they decided to do another pause and not cut rates. And as Jerome Powell went to the podium, he kind of made some commentary that the Federal Reserve was not a guaranteed rate cut in the month of March. They're going to evaluate the data as it comes in and see if they can get price stability in the market, as well as maximum employment and a target inflation rate of 2%. So he kind of took the wind out of the sails of the markets, if you may, by saying that. And this seems to be the good cop, bad cop rule, if you may. Like, hey, I'm going to give you a little good, and then I'm going to have a bad cop, maybe another Fed, voting member comes out and says their opinion on why we should or shouldn't cut rates. All of these things sway the market, and it's almost as if the Federal Reserve picks their battles, picks their entry points here. It's almost like, hey, let's protect the stock market, but we're not too worried about the other markets, and we're going to make commentary to kind of sway that. And you see it happen way more than historically I can imagine. And again, going back to media coverage, maybe that's the case. But he led by saying, Pelley said, hey, you avoided a recession, so why not cut the rates, right? And this is right out the gate. This is one of the things they talk about. And I look at it as Powell's comments is, I'm going to read the transcript here. We're going to put it on our YouTube channel at What's Your One More. That's at What's Your One More. This whole transcript will be on there. But I kind of highlighted the sections I wanted to talk about because these are the ones, the rest of it's just kind of historical history lesson. But he said, well, we have a strong economy. Right out the gate. It's the first thing he said. Now, I continue to kind of stress why I disagree with that comment. I mean, do we really have a strong economy? We look at the job market, and, he's going to talk about the labor reports. He goes on and said growth going on is at a solid place. The labor market strong at 3.7 unemployment, and inflation is coming down. With the economy strong like that, we feel that we can approach the question of can we reduce rates carefully? Do we need to do it now? Now, for me, is the economy strong? So listeners, I get your commentary that you're putting online. I appreciate the feedback. Many of you are very much indicating that it's not a strong economy. Your bills are going up. Your household bills are going up. The basic need items are going up. It's not getting better. And later on in this interview, he talks about why those aren't going to come down. That's just a fact of growth of economies and inflation. Specifically says it just like that. But let's face it, a lot of people are still losing jobs. And we've talked about these labor reports and why they're not 100% accurate. And we talk about the revisions that are happening afterwards that are providing a negative job growth rate, not the positive one that's being reported after the revisions come in. We have more people in the history ever of the United States working 2 jobs. And in some cases, they're working 2 part-time jobs because they lost their full-time job. We have more government jobs now than we've ever had before. This is not signs of a growing economy. We have more credit card debt historically than we've ever had before. We have the lowest savings rate that we've had pre-pandemic over the last 10 years. This is not a sign. People are depleting their savings to live off of. Credit card debt is financing lifestyles for basic needs at this point. That's not a strong economy. So to me, that was an interesting take, and it seems to be repeated over and over again. And, and he really kind of rests back on the loins of that. And to me, that was something that doesn't make sense. The data doesn't agree with that. But I think that this is a good example of kind of painting a picture that this Fed is doing right now, and it's not accurate. They basically said that, hey, listen, we want to see some more good data before we cut rates and continue to see inflation come down. That's what he means is the good data, continue to see it come down. Now, remember, the Federal Reserve follows the core inflation of PCE, and he says, hey, listen, we look at a 6-month window because we can't control the last 6 months, but the current 6 months we're looking at. Well, if you look at the current 6 months, we're actually right at 2% right now. I mean, in his own words, we're already there. Why not cut rates? Why be so coy about a rate cut that may or may not happen in March? Why not go ahead and say it? Well, it's because they don't want to go ahead and shock the market and everyone price it in and not take advantage, but just say, hey, listen, we're going to go ahead and take the ideology that the cut's happening. So we're going to price that in now, whether it's in the bond market, whether it's in the mortgage-backed securities market, or whether it's in the stock market. But he later on goes to say, if something changes, it would be bad if they did that. So we wait until the last minute to divulge that. So I'm going to fast forward through the interview here. Pelly says, hey, many in the financial industry expect you to lower the interest rates, in the month of March. Is that something that's a guarantee? Are you going to do it? He talked about, again, hey, we're focusing on this economy. We're focusing on the data that's going to be coming in. He said, but I would, and this was interesting, but I would also say our focus is on the goals that Congress has assigned us. Now, why do I say that's important? The goals that Congress has assigned. Now, they've assigned them maximum employment, stability in price stability, and then also a target rate of inflation. But this really shouldn't be about what the administration is assigning you right now. You should be able to stand as your own independent agency. We've talked about that before. The Fed should never play roles in politics, and he talks about that later on in the interview. He specifically says we never would. But the reality is, if you're taking marching orders from someone, you are playing politics in a little bit, and I think that's something that it kind of speaks to right here in the interview process. And I often wonder in an election year how big of a role that's going to play. And so I think that's something that will play out here. And Pelly does a great job of kind of, going after him a little bit and saying, hey, yeah, but there's a lot of people that will disagree with you here. They think you're playing politics. And he insisted that they weren't. But I do believe in an election year, the Federal Reserve, even though Powell says this is my 4th election year that I've gone through, I don't do that, and neither do the Fed members. But we'll see exactly how that plays out. Because the reality is, if you're taking marching orders, you are absolutely going towards politics. And then he gets into the national deficit. And I'm going to kind of fast forward into that real quick because I thought this was really interesting. Now, by the way, for those listeners, national deficit just crest $34 trillion. We just went from 32 to 34 trillion in 8 months. Let that sit in for a minute, because we took in an episode and explained what $1 trillion, how many years it would take if you spent $1 million a day to pay that out. It's kind of shocking. So to go from 32 to 34 in 8 months, pretty crazy. But he goes through here and he says, hey, listen, I want to ask you about the national debt. I want to ask you, do you think there's an issue going on there? Is it a problem? And his immediate answer was, yes, it's a problem. We can't sustain spending like this. And I'll back up. Let me say this. He asked him right out the gate, Pelly did. He said, listen, national debt concerns, does it concern you? Does it not concern you? And he would say, here's my answer on this. We don't try to comment on the national deficit because we don't control the national deficit. Now, I thought that was interesting because that was his first comment. And then Pelly presses him even more and says, yeah, but is it sustainable? And he says it's not sustainable. And then he kind of draws out the answer that, yes, it would be a concern. It's not sustainable. But for Powell to answer, hey, listen, this is not our concern. We really don't have an issue with that. I kind of want to point out something here. It's the Federal Reserve's job to point out issues of deficit to the federal government. They should go to the federal government. Here's why it's their job. Because every time we are at a deficit, we are creating more money supply in the monetary system in the form of issuing new debt. Now, if the job is to reduce inflation and we're allowing our government, our congressional government, this administration, past administrations to operate at a deficit, you're essentially offsetting what the Federal Reserve is doing. You're undermining the policy in which they're putting into place. And if your job is not to if your job is not to adhere or take advice from the government, you stand as your own agency. You should stand up and say, hey, listen, what you're doing is incorrect. And what you're doing is causing additional money supply in the system, which is thus undermining what we're doing. So it's going to take us longer to accomplish what we're trying to accomplish if you keep operating at this level. That's what they should be saying. Not, well, we're not really concerned with it. We don't pay attention to it. You should be concerned with it. You should be paying attention to it. And you are. And you're just not wanting to tick off the current administration. That's exactly what that is right there. Why? Because we're in an election year. That's probably the number one reason. The second thing is this, is that they should come back and say, hey, listen, the pain that this is causing the American public by delaying this to be accomplished at a quicker rate, that's on the citizens of the United States. And later on, they said, "Are you asking the American people for their patience?" And he said, "Yeah, I am. I'm asking for their patience." And I've been telling them that we were going to go through some difficult times. Hey, time out, Jerome. That doesn't make it any better. I'm sorry. Hey, I'm going to ask you for your patience. That's like saying with all due respect and then turn around and insulting someone. It doesn't work like that. So just because you're asking people for their patience and you're telling them it's going to be a tough time, does the American people, does the public have a chance to pivot and prepare for that? No, this isn't like you're saying, hey, a hurricane's coming and it's coming in the next 72 hours, you need to evacuate. That's not what that is. And what happened is that they've caused so much pain in price stability that prices of your basic needs have gone up. You're seeing it at the grocery store. You're seeing it at restaurants. You've seen it some days at the pumps, and then some days it's being fluctuated. But that is not okay. Rents have gone up. Anything that's involved in a product that has items in that product that are skyrocketing are being passed down to the American people. And asking people for their patience isn't the easiest way to kind of answer that or say, well, I told you so. And so the reality is this. Again, he's specifically said, yeah, I don't really pay attention to the national debt. And then he followed up with, well, it's not sustainable and it is a problem. And I think it should probably, be addressed sooner than later. Over the long run, he said, that he is worried and that we're borrowing from future generations. Now, this is after about 5 minutes of Scott Pelley wrestling with him back and forth and bantering him with the same question over and over again. He finally said, have you had a sense that this worries you about the national debt and the fact that it can't be substantial? And he said, over the long run, of course it does. His response, we're effectively borrowing from future generations, and every generation really should pay for the things that it needs. And it can cause the federal government to buy things that it needs for, but really should pay for those things and not handle those bills down to the children and grandchildren. And what he's saying is, listen, you borrow for the now, not for the future, and you don't continue to borrow for the future to pass that down to future generations. And the reality, Pelley said, well, is this urgent? And he said, you could say that it was urgent, yes, meaning stop the spending. So he finally pulled the answer out of him. And the reality is, here it is. You have the Federal Reserve Chairman saying, listen, we've got an issue with the national debt. It is a problem. It's something that we've done 3 episodes on, and we continue to talk about, that it's borderline becoming irrecoverable. And at some point, you're going to see things happen to stop that from growing. And those things are going to be in the form of tax hikes, going to be in the form, whether it's a VAT tax that gets issued or taxes to the general public, American people. It's going to come in that rate. Other funds that may suffer from that, and it could be Social Security Administration, it could be the Veterans Administration. I mean, the list goes on and on. It could be Department of Defense. I mean, all of those things at some point are going to have issues on that because of what we continue to spend over and over again. And for the last part of this on this episode, I will say this, that we're going to see a cut in March. The Federal Reserve is going to do it, and they have to at this point, because there's a couple other things, that national debt that they didn't get into in this interview, is that if the Federal Reserve continues to maintain rates of where they are, the payment alone on the national debt becomes part of the deficit. It actually becomes the largest part of the deficit. So in order to reduce that, reducing rates helps that tremendously. So, you can almost say that there's going to be a cut at some capacity. The answer is how much in the month of March. In anticipation of that, we should start to see better interest rates in mortgages. We should see better interest rates on credit cards. All of this is an impactful moment when rates come down, which all leads back to helping the general public and the American people. And I think that's extremely, extremely important on here as well. Last thing, I said that was last thing. This will be the last thing. Last thing he touches on in this interview is housing and what that means to housing. And, part of the pain process he talked about was that, hey, listen, we knew we increased rates. We knew that would apply rate sensitivity to the housing market and the credit market, and it did. And he said, and that was part of the plan. And he said, and we've seen that get better as we've talked about rate cuts. And I thought that was really important. They haven't cut anything. They've only talked about rate cuts. And in the talk of rate cuts, you're already seeing markets lower, rates start to be lower in certain markets, one of them being the mortgage market and some in the credit market, not as much. But imagine what happens when they actually do lower those rates. Imagine what is going to take place in specifically the housing market. You're going to see rates start to fall. And again, we've talked about why it's a cliff and not a stair. And stair steps, you're going to see significant decreases. And when you do, it's going to cause more people to come to the market to take advantage of what is there now versus what they've seen over the last 24 months. Because you got to think, over the last 24 months, the rates have not been great. They've not been ideal. If they slip down in the low 6s, upper 5s, and they maintain some stability at that, Yeah, you can bet there's going to be another wave of housing demand during that time. And that is what we're anticipating here in 2024, heading into 2025. And that stability and that demand will grow. So, guys, if you like what you're hearing, please 5-star review this podcast on any platform that you listen to your podcast on. And then specifically on Apple, we'd love your feedback. If you leave a comment on that and on our YouTube channel, it would mean a ton to us. Thank you guys for tuning in, and we'll see you the next episode of What's Your One More.
I got one more shot, I'm gonna make it. One more chance, I'm gonna take it. I meant it when I said it, now it's time for me to do it. I got